Friday at 12:30 p.m. only on BloombergQuint.
Good morning and happy Monday to you. You're watching All You Need to Know on BloombergQuint Live and I'm Alex Matthew. First, the headlines. Asian markets begin the new week on a positive note, tracking a strong session on Wall Street on Friday. Axis Bank's Jairam Sridharan quits as the lender's chief financial officer. The bank has initiated a succession plan. In the auto space, Maruti Suzuki's production rises for 4% in the month of November. This is the first rise in production after 9 straight months of output cuts. Oil prices hold steady after Friday's gains. OPEC and its allies have agreed to deeper production cuts starting the 1st of January next year. All right, let's talk about the U.S. markets now. They staged a sharp rebound on Friday with all 3 benchmark indices posting gains of nearly 1%. The economy created more jobs, or rather most jobs, since January this year, while unemployment fell to a 50-year low. Renita Young of Bloomberg News wraps up Friday's action in this report.
U.S. stocks ended higher on Friday, closing out the week in the green as upbeat economic data bolstered confidence in the world's largest economy against the backdrop of the U.S.-China trade war, which continued to move along, and investors actually saw more positive signals than negative during the session. Now, during the session, that economic data included consumer sentiment, which increased to a 7-month high, and a very, very strong jobs report, which saw unemployment numbers lower, U.S. payrolls beat expectations, and hourly wages rise better than expected. And as a result, the U.S. dollar rose on that report. So did the Bloomberg Dollar Spot Index. And gold, in turn, dropped a little bit lower than 1%, since investors did not see the need for a safe haven during the session. Meanwhile, in companies news, Uber slid after reporting more than 3,000 sexual assaults claims last year that are currently under review. In the earnings space, despite Big Lots fourth quarter earnings per share missing analyst estimates, it actually rose more than 25% during the session on a bullish view for next year. And last up, we saw Ulta Beauty climbing more than 13% on a third quarter sales figure that beat analyst expectations. And this was mostly due to its skincare lines gaining during that latest quarter. And that's a look at your Wall Street action on Friday. In New York, I'm Renita Young for Bloomberg News.
All right, some of that positivity seems to be carrying forward into the Asian markets this morning as well. To take a closer look, I'm joined by Sophie Kamruddin, who's joining us from the Bloomberg studios in Hong Kong. A lot of green on the screen at the start of the week. Sophie, how's it looking?
Well, we're seeing a slight risk-on tone, you could say, with Asian stocks just making modest gains while bonds are drifting lower at the start of an event risk-filled week with UK elections and policy decisions from the Fed and the ECB ahead of the December 15th tariff deadline. Now, that surprise drop that we saw on the weekend in Chinese exports before that has weighed on the Aussie and Kiwi dollars, and the yuan now trading around 7.03 for both the onshore and offshore rates. And we did see a rebound, though, in Chinese imports, and that seems to be a positive for Japanese exporters, and that could be helping the topics rise for a third session. But overall, we are seeing a relatively subdued reaction in Tokyo to the final third quarter GDP report, which showed a much faster growth than initially estimated, with that coming in at 1.8% year on year, thanks to strong business investment. And here in Hong Kong, shares are gaining ground up about 0.2% after Sunday's pro-democracy march, which saw thousands participate as we marked 6 months of protests in the city. And the Shanghai comp also marginally higher, just by 0.1%. And we are seeing U.S. futures under pressure in the early Asia session, while treasuries are steady. And a quick word on oil. WTI has crept back below $59 a barrel, and Brent's also giving back some of the jump that we saw on Friday that was sparked by OPEC's cut to quotas, and following which Goldman has raised its 2020 oil forecast. Back to you.
Thanks so much for that, Sophie. All right, let's talk a little bit more about that Chinese data. Chinese exports fell unexpectedly last month, possibly as a fallout of the trade war and with slowing global demand taking a toll. Selina Wang of Bloomberg News breaks down those numbers for us in this report.
This really underscores the impact of the trade war as well as weak global demand. And these numbers were a surprise, as you said. We were expecting those total exports to rise in November, but they actually fell more than 1%. And the impact of those tariffs were especially stark when you look at trade with the U.S. You had exports to the U.S. falling more than 20%, and that's the 12th straight monthly decline. Now, Bloomberg Economics expects this sort of long-term pressure to continue even if a phase one deal is reached because of that weak global demand, especially from China's major trading partners. Now, there was a bright spot, which was in China's imports, and Macquarie says that this may be a sign that China's domestic economy is starting to stabilize. But at the same time, some of that boost may have been from increasing imports from the U.S., which we saw rise 2.7% as a result of some of those goodwill measures with agricultural purchases.
So, Selena, what is the latest on the progress of the trade talks? Because we've had some recent comments from Larry Kudlow.
You know, believe it or not, it's been 8 weeks since Trump said that a phase one deal with China had been reached. In that time period, we have seen escalating rhetoric and diplomatic tensions around Xinjiang, around Hong Kong. But despite that, our sources say that the U.S. side is still expecting to reach that December 15th deadline. That's when those tariffs are going to hit consumer products like smartphones and laptops. It's really going to hurt consumers in the U.S. ahead of a major holiday, and it's going to further dampen Chinese exports. So a lot of incentive on both sides to reach a deal. Now, we did get a little bit more information from Larry Kudlow on what this might mean and just how far along they are.
The final strokes are not there. We're coming down to short strokes. We've been there. Now, some of the most delicate matters have to be adjudicated, discussed, analyzed, and evaluated.
We know that some of those delicate areas that Larry Kudlow just mentioned include the amount of agricultural goods that China is willing to purchase, as well as China's continual demand for a rollback in those tariffs. Now, on the agricultural front, as I mentioned earlier, there has been some positive momentum. On Friday, we also learned from the Chinese government that they are going to be offering some exemptions on some U.S. pork and soybean products. But again, I just want to reemphasize that we've been here before. We've been close to a deadline, only to have talks break down again. So we still have to wait and see.
All right, OPEC sprang a surprise on Friday with the oil cartel agreeing to deeper production cuts from January 2020. The nations will now pump 1.2 million barrels per day compared to the earlier 1.7 million barrels. James Thornhill of Bloomberg News gets you the rationale behind the move.
It's a little bit surprising. The market was aware of these cuts in the US on Friday, so we did see a strong rally into the close there, gains of between 1% and 2% on the key benchmarks. I guess that perhaps reflects the lack of follow-through that we are sort of still relying on the cuts being complied with by some of the recalcitrant nations who were sort of hadn't really followed them this year. Iraq being the classic case in point. They were the ones who were very vocal in pushing for an extra 400,000 barrel cut heading into the meeting, but in fact they've been one of the worst in terms of following through. So I think what we will see is the Saudis putting a lot more pressure on those sort of nations to follow through on these cuts, and until we get clear evidence that they are, then maybe the market will be hesitant to push too far on the upside.
So, Jim, what was the Saudis' motivation? Any chance the Aramco IBO played a part in this?
Yeah, I certainly think the Aramco deal was uppermost in the thoughts of Abdulaziz bin Salman, the Saudi oil minister. I mean, he's actually played a pretty strong hand, I think, in this meeting. There wasn't a great expectation in the market, those Iraq comments aside, that there would be these production cuts. Partly a fact that it was so quiet from the leading members heading into the meeting, and in fact, even as the meeting was going on, there was very little leakage about these cuts that did actually end up eventuating. I think the IPO is expected to launch on the Saudi market on Wednesday with a valuation of 1.7, and the leadership there has really staked a strong claim to get that level up to 2 trillion. So clearly, with tightening this supply up, that will help push prices north and help get that valuation closer to 2 trillion. And I think that's certainly a motivating factor behind the cuts we saw announced on Friday.
All right, let's also take a look at what else is making headlines across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
We're going to start in Hong Kong, where hundreds of thousands of people joined Hong Kong's biggest demonstration in months, in a sign that popular unrest will continue into the new year. Protest organizers say that 800,000 people marched through the city on Sunday, while police put the number much lower at below 200,000. The rally was the first promoted by the Civil Human Rights Front to win an official permit since August. To the U.S. and North Korea now, President Trump is downplaying recent missile tests in North Korea, saying that Kim Jong-un is, quote, too smart and has too much to lose if he acts in a hostile manner toward the U.S. Trump tweeted after Kim's envoy to the UN said talks on denuclearization are now off the table, and Pyongyang said that Kim had overseen an important test of a long-range missile launcher. State media did not say what kind of rocket was tested. Qatar says that it is holding talks with Saudi Arabia, the latest sign that the diplomatic and business standoff in the Gulf may soon be resolved. News of contact comes after Saudi King Salman invited the Emir of Qatar to attend this month's summit of Gulf Arab monarchies in Riyadh. Saudi Arabia, the UAE, Bahrain, and Egypt cut links with Qatar back in 2017, accusing Doha of funding terrorism and of having close ties with regional foe Iran. The latest opinion polls in the UK, meanwhile, all give Boris Johnson's Conservative Party the lead this 4 days before the general election. Brexit is expected to be top of the agenda as people vote, and those opposing the split with the EU are now urging a tactical vote against the Tories, backing the candidate most likely to win a seat. The Prime Minister has warned that complacency is the main threat to a Conservative victory. Global news 24 hours a day, on air and a quick take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, let's turn to how the markets are likely to shape up today. I'm joined live by he's in studio. Agam Vakil is joining me to tell you all about that and also what's happening in the futures and options space. Morning, Agam. How are we looking today?
Good morning, Alex. Well, what we're seeing right now is not too much movement, and consolidation has always been on the cards for the Nifty. The SGX Nifty is, at this point in time, indicating a very quiet opening for the trading week. But let's take a look at how things have shaped up last week. And, as far as the indices are concerned, the Nifty, well, considering it moved down by as much as, 0.8%, it also eventually put the weekly tally to the red. Mid-cap and small-cap indices showing a little more weakness on the whole. The banking indices, there are no exceptions here. In fact, the PSU banking index was down as much as 4.5%. But moving on, let's also talk about your ADRs. For now, it's been a mixed picture. We do have, well, sharper cuts in something like a Tata Motors, but not otherwise. Less than 0.5%, moves for any of the other stocks. But, as far as fund flows are concerned, now is the time when we actually started seeing FIIs start to sell into the Indian equity markets. This is perhaps the second straight day where we have seen that net sell figure come in. This time worth 868 odd crores, 210 odd crores, buying coming in from DIIs. But moving on, as far as indices go, we do have Reliance Industries along with Kotak Mahindra Bank and Bharti Infratel keeping things in check, or at least trying to keep the fall in check. But there was further weakness in some very heavyweight companies like HDFC Limited, SBI, ITC and Axis Bank. So it is the banking sector which is certainly weighing down on the indices. Moving on to your futures and options space, well, last week was all about unwinding, and this time we're starting to see some shorts build up, specifically in the Nifty, where the open interest has increased 2%. The Nifty banking futures looking at unwinding a significant amount, down 9%, indicating longs taken earlier, which are now starting to get unwound. But moving on to your open interest distribution, again, it's still 500-point range and still a very heavy support around 12,000. But what has also changed is that there is now some considerable accumulation around the 11,500 mark. And do remember, this is the 11,500 put. Do remember, we closed below 12,000 as far as the Nifty is concerned, and that always remains something which could be tricky going forward. In terms of changes of open interest, I reckon that it was the 11,500 put, as I've mentioned earlier, was the one which saw the most amount of accumulation, a little more writing around the 12,000, 12,100 calls to unexpected lines, considering the bench benchmarks came off. But surprisingly, the VIX also fell, and this was despite that indices came off too. Down 4.5% below the mark of 14. The Nifty put-call ratio fell to around 1.25 from 1.5. And in terms of stocks, let's keep an eye on something like an Equitas holding. Of course, it's in focus, revolving a lot of other news, and of course, L&T Finance holding, RBL Bank, Bank of Baroda. A lot of these financial names remain in focus as far as activity in futures goes. A lot of shorts in all these three financial, non-banking financial companies. But let's move on and talk about your stocks which are seeing unwinding. Tata Elxsi, an interesting move considering we did see a lot of longs building up on Thursday, and those were unwound on Friday. Colgate-Palmolive, Vodafone Idea, and Mindtree among others. So, Alex, it was a mixed day of trade on Friday, and that is possibly what we are expecting today as well.
Thanks so much for that, Agam. All right, Soumit Sarkar is joining me now to tell you about the stocks in news. Good morning, Soumit. What's on your list today?
Good morning, Alex. I'll start off with Dish TV, where Care Ratings has cut the company's rating on bank facilities worth nearly 850 crore rupees to D from an A4 plus rating. Now, the rating was revised after the company defaulted in a payment of short-term loan due on November 28. Along with this, CRISIL has also downgraded the rating on bank facilities for PC Jeweler to a D rating. Now, second on the list is Equitas Small Finance Bank, where they have approved the issuance of 4.75 crore shares. That is 4.5% stake at 52.7 rupees per share, to a total of around 250 crore rupees of fundraising done by Equitas Small Finance Bank, and to a private placement to IFL Group, High Conviction Fund, and Trivandridge Capital. KNR Construction, they have signed a concession agreement of HAM project worth nearly 920 crore rupees with NHAI, and they have also received work orders worth nearly 166 crore rupees from Hyderabad Municipal Corporation. Punjab and Sindh Bank, because the board has approved raising up to 500 crore rupees through QIP within a period of next 12 months. MCX, because the CFO Sanjay Wadhwa has resigned from the post with immediate effect. Now, a couple of stocks that would remain in focus because of November updates, where Goa Carbon has come out with the November production update, saying that the production was up nearly 7 times compared to last year, while Sagar Cement is saying that the sales were down nearly 24% compared to last year to close to 241,000 metric tons. Pokarna, because the US Department of Commerce has preliminarily determined an anti-dumping duty of 2.62% on quartz surface products that the company produces from companies shipped to US. Now, the company is saying that they will take legal steps, and they are saying that they have not been engaged in any dumping of quartz products in US. NVCC, because they have received a government order worth nearly 621 crore rupees in New Delhi to work as a project management consultant. And lastly, Wellspun Corp, because they have received awards contract of nearly 179 kilometer tons of multiple projects for developing pipes, of which nearly 161 kmt will be serviced from their US facility. Now, this is the total order that the company has received in the last 1 month, and currently the company's order book stands at close to 1,459 kmt, valued at close to 12,100 crore rupees.
All right, thanks so much for that, Soumit. Now, Radhakishan Damani has appointed at least 2 banks to sell some more stake in Avenue Supermart, which is the holding company, as you know, of D-Mart. Now, apparently the billionaire has time till March of next year to bring it down his stake to 75% and to increase essentially the public float in order to meet those regulations. I'm joined on the phone line by PR Sanjay of Bloomberg News, who has essentially reported on this story. PR, what are you picking up on this, and what is the amount of stake that is being sold, and is there any any information that you're getting with regard to the price?
Hi, Alex. Thank you for having me on. Alex, you know that D-Mart is the only company that has, weathered the slowdown storm. And now, the billionaire, Radhakishan Damani, has decided to comply with the laws where they have to reduce promoters' float up to 75%, which means they'll have to maintain that minimum 25% public float. And what we are picking up is that they have already appointed 2 bankers. They might add more bankers to it, and the company may also issue some fresh shares, and while promoters will also encash this offer for sale, and the company will use that money to fund the expansion. And the price details, we are to get more details on price. They will be selling at least 5.2% in this tranche.
All right. Thanks so much for that, Sanjay. Let's turn to news in the banking space. The banking regulator has barred asset reconstruction companies from making new bilateral loan purchases, a move that may affect players like Indiabulls ARC and Edelweiss ARC. Advait Rao Palipu reports.
In a notification issued on the 6th of December, the Reserve Bank of India directed asset reconstruction companies to not purchase loan assets from banks or financial institutions that they are related to. The Reserve Bank of India has said that ARCs cannot purchase loan assets directly or bilaterally from banks or financial institutions within the same group, or if the bank or financial institution is a sponsor of the ARC. Further, banks or financial institutions that have given loans to the ARC or that have subscribed to the ARC's funds cannot sell their loans directly. However, the banks and financial institutions do conduct auction process when selling their loans, and ARCs that are related to the same entity can participate in these auctions, provided that these auctions are done in a fair and transparent manner, and the price discovery mechanism follows an arm's length relationship.
Now, Advait also reports on the third major exit from Axis Bank within a year from the leadership team. The private lender's CFO has also chosen to submit his resignation. Listen in.
Axis Bank's Chief Financial Officer, Jairam Sridharan, has tendered his resignation from the post after serving for nearly 4 years. Sridharan had joined the bank in June 2010 to head its retail lending business and had been appointed as CFO in October 2015. The bank, in a notification to stock exchanges on the 6th of December, says that based on the recommendations of the Nomination and Remuneration Committee and the Audit Committee of the board, it will start initiating the succession plan for the post of CFO, and a suitable candidate will be appointed in due course. Further, the bank has seen 3 major exits in the last year, with Shikha Sharma, the erstwhile Chief Executive Officer, resigning in December 2018, following which V. Srinivasan, a director of the bank, also resigned. In January 2019, this year, Amitabh Chaudhary had taken over the post of CEO after spending nearly 9 years leading HDFC Life Insurance Company.
Turning to the automotive space, the Automotive Component Manufacturers Association of India, or ACMA, has seen a 10% decline in its top line for the first half of the current financial year. Nishant Sharma of BloombergQuint spoke to Deepak Jain, the president of ACMA, on the association's future plans as well as their demand of GST rationalization from the government. Listen in.
I think the concern for us is basically that the component industry is made of basically 3 buckets. We have the domestic, we have the aftermarket, we have the export. Obviously a 10% degrowth is not desirable, but this is actually the outcome of this industry. The 15% domestic degrowth kind of mirror images what the industry performance of our customers have been. Maybe some few silver linings have probably been on the aftermarket. We have still had a stable aftermarket and we have grown about 4% in the aftermarket, as well as in the export. If you look at it, we're still a net importer, but the deficit has actually reduced from a $1.7 billion to $900 million vis-a-vis H1 last year to H1 this year. So that way export has also grown about 2.5%. So overall, this is the industry structure. But I think the concern is the pain still continues. We had the opportunity and we were growing at a very robust pace over the last 3 years or so. Of course, it's a cyclical trend as well. But there is a concern for going forward and how basically it pans out.
How are the things looking out? The data was from April to September. How have been the months of the festive months of October, November, and how the upcoming months going to be?
So we feel that we should be able to do better in H2 than H1. So there are, and the reason I'll tell you what, there are 2 ways to look at it. Number one, if I compare it from last year to this year, you have to understand that the degrowth or the slowdown started from H2 of last year. So when I will compare H2 results, which are already muted of last year, to H2 this year, you will see a reduction in the growth, maybe deficit, right? That's one. Number two, just on saying Q4 or Q3, we feel that the festive season, although there was a kind of a degrowth as an overall quarter, but there has been a lot of retail corrections by a lot of companies, given the fact that BS6 is around the corner. We feel that Q4 will see almost all launches of BS6 vehicles. And we feel that for the component industry, the demand by the OEMs given for Q4 would be a little bit better. Reason being that they would be launching vehicles and also probably filling in their pipeline of retail on the Q4. However, we all know that 1st April 2020, we have basically BS6 coming in. With that, obviously, the pricing will have much more impact on this. India is already a very price-sensitive market. And if the financing doesn't basically improve, then you will see probably adverse impact on Q1. Right. So this is actually our, at least I would say, Q4 and Q1's outlook.
What are the key demands from government at this point of time? What can it do to, bring back the sentiment? We have seen a number of initiatives from the government, announcement of the government. What more do you expect?
I think one of the long-standing demands from the government, from the component side, has been that please, if you could just rationalize the GST structure. We have two tariff lines, 28% and 18%, almost 40% of our components are actually still attracting 28%, which is a higher duty. We are manufacturers as throughput, so from the government point of view, there's not going to be loss of revenue if it actually reduces from 28 to 18%. The little bit loss of revenue would be in aftermarket. But the aftermarket needs that support because this would actually help us to actually reduce the spuriosity, which is going, because that 10% differential is quite a bit. And this will help us reduce the spuriosity into the aftermarket channel. Reducing spuriosity means that you also give your customers better, genuine quality parts and also safer products. So this would actually overall improve the performance of the industry.
Turning to politics, Maharashtra is seeing a three-party alliance for the first time in its history. That's according to former Chief Minister and Congress leader Prithviraj Chavan. Speaking to Quintillion Media's editorial director Sanjay Pagalia on our special series Rajpath, Chavan explained the rationale behind the Mahavikas Aghadi. Listen in to a slice of that conversation.
देखिए, पहली बार महाराष्ट्र में तीन दल साथ आए हैं। दो पार्टियों की सरकार तो हमने देखी है 1995 के बाद में। पहले शिवसेना बीजेपी साथ आए थे, उसके बाद कांग्रेस एनसीपी साथ आई थी, लेकिन तीन पार्टियों की सरकार पहली बार बन रही है। दिक्कतें तो थोड़ी होंगी, और विशेषकर शिवसेना के साथ पहली बार हम सरकार बनाने जा रहे हैं। शिवसेना के हमारे मतभेद थे, पहले से थे, लेकिन क्या वजह थी कि हम तीनों ने साथ आने का फैसला किया? ये बात मैं आपको बताना चाहता हूं कि 2014 में जब हम चुनाव हार गए थे, उस समय भी ये बात उठी थी कि क्या हम तीनों इकट्ठे हो सकते हैं, क्योंकि आपको याद होगा कि 2014 में जब चुनाव हुआ था तो पहली बार सिर्फ भाजपा ने अपने बलबूते पर सरकार बनाई थी। शिवसेना भी बाहर बैठी थी और शिवसेना के नेता विपक्ष के नेता थे और कांग्रेस और एनसीपी भी बाहर थी। तो उस समय भी बात उठी थी कि हम उसी समय अगर तीनों इकट्ठे हो जाते तो शायद हम बीजेपी को रोक सकते थे। मैं सिर्फ यही बताना चाहूँगा कि पिछले 5 साल में देवेंद्र फडणवीस सरकार ने जिस तरह से राज्य को प्रशासन दिया है, राज्य की जो समस्याएं जो बड़ी हैं, जो वादे किए थे उसमें से कोई भी वादा पूरा नहीं हुआ, पूरी तरह से सरकार विफल रही, जिसके कारण महाराष्ट्र की जनता ने दोबारा देवेंद्र फडणवीस को सत्ता नहीं सौंपी। लेकिन बात वहां तक सीमित होती तो अलग बात थी, लेकिन असली रीजन यह था कि जिस तरह से चुनाव के 2-3 महीने पहले देवेंद्र फडणवीस ने या तो अमित शाह से कोई आदेश लिया था या अपना ही उनका दिमाग था, विपक्ष को पूरी तरह से तोड़ फोड़ रख के सारा विपक्ष खत्म करने की जो बात की, जिसके चलते एनसीपी और कांग्रेस के करीब 35 सिटिंग विधायक और सांसदों को तोड़ा गया। उनको रिज़ाइन करना को बाध्य किया गया, उनको एक इस तरह की दहशत निर्माण की, जिस तरह का ब्लैकमेल हुआ, जिस तरह का जो कोऑपरेटिव सेक्टर हो, चाहे एजुकेशन इंस्टीट्यूशंस हो, जो भी लोग संस्था चला रहे थे, उन पे जो भी कार्रवाई की गई, कईयों को जेल में डाला गया, और एक तरफ दूसरी तरफ जो पैसे का इस्तेमाल हुआ, ये दोनों चीज़ें जिसको मुख्यमंत्री बड़े शौक से साम दाम दंड भेद नीति कहना चाहते हैं, उसका पूरा अपना एक उपयोग हुआ, जिसके चलते 35 लोगों को तोड़ा गया। अब सवाल ये था कि अगर चुनाव पूर्व अगर ये हरकत कर सकते थे, अगर देवेंद्र फडणवीस फिर से चुनाव जीत के अगर मुख्यमंत्री बने, तो फिर कांग्रेस पार्टी का और एनसीपी का क्या हाल होगा? क्या एनसीपी कांग्रेस बची रहेगी?
All right, well, that's all we have for you in this edition of All You Need to Know, but clearly there's lots to talk about over the course of the day, so don't forget to tune in to BloombergQuint.